In my previous video, I spoke about how often to drip feed. However, I just looked at one single index fund. So today we're going to look at a few more. So if we take a period of 30 years, that is from 1991 to 2020, investing £1,000 into the S&P 500, I'm using the index here, so the ticker symbol is GSPC. What you do find is, in terms of investment frequency, the annual investment is the best, just like we found last time. So here you can see on the graph, so in the dark red one, that's the annual line, and you can see it's above the other ones. Looking at the table here, you can see there's a difference of £5,000 between the other ones, and you can see that growing over time. So here for daily, you can see it happens at the beginning, so there's only £4 at the beginning of that year. Weekly, first working day of the week and first working day of the month, the investments happen. And that's why you see a front loading effect, as I mentioned last time. But towards the end of the year, you can see it's caught up roughly, right around the £1,000 mark. But here you find that there's been compounding already happening within the first year, so there's a lead that the annual investment frequency has generated, and you can see that happening in the second year as well. So daily, weekly, monthly, not a big difference, but then it starts to grow a little more on the annual basis. Again, that story repeats itself, so there's about £200 difference here, then it keeps growing over time until it creates that gap of £5,000 towards the end. So that's the compounding effect over time, and that's why the annual frequency is the best option. But is it true for the other indices as well? Let's have a look. So next I'm gonna move to the Nasdaq 100, so that's NDX, and this might take a few seconds. I'm calling the API here, so that's why it's taking a few seconds. But same story, as you can see here, it's the annual that comes ahead, and the difference in this case, obviously the value is a lot more because the Nasdaq 100 was, grew a lot faster. So here we're talking about substantially a lot more. Can't do arithmetic in my head, but it looks like 30, bit under 30,000. Not gonna even try, but it's substantial. So let's look at the FTSE 100. So ticker symbol for that would be FTSE. Yeah, let's try that, and I would expect the same thing, but probably not a lot more in terms of the difference, because it hasn't grown that much. The compounding effect is not that strong. So let's find out. So again, its annual here is slightly ahead, not a big difference actually. As you can see, it's quite close to the other frequencies as well. And if you look at the end of the period, you can see it's very minimal difference. So depending on which indices you look at, it can make a big difference. So let's try the FTSE 250. So FTMC is the ticker symbol, I believe. So that's the top 250 companies in UK. And just a few seconds there's a bigger difference here, right? So you can see it's substantially more than the FTSE 100, and yeah, so around just under £5,000 difference. But again, I think the compounding effect was possibly a lot stronger here. Now let's move on to the Dow Jones here, so DJI. And I'd expect again the annual frequency to go ahead. Let's see. Right, so with the Dow Jones, I haven't got data for the full period. It starts in 1993 so I'll change this to 1993 just so that we have complete sets of data. So it's a bit less than 30 years of compounding here. And let's see what the result look like. So again, so the annual frequencies come up ahead. So you can see at the end of the first year, there's already that lead I was talking about. Again, you know, the lead actually narrows in the second year, but generally over time, and it widens in the third year again. So it goes up and down, but you can see it over the long run that widens. Okay, so you could have occasions where it gets overtaken, the annual frequency gets overtaken, but generally the trend is front load your investment. So put as much investment as you can early on. And we'll end on that. All I want to say is thank you for watching, and I'll see you next time.